Partners Group is a global private market firm. We specialize in anything that is not listed on the stock exchange, currently managing about 57 billion of euros in private market assets around the globe with 19 offices and 1,000 employees. We seek very strongly to align the interests of the employees with the clients. So there are several layers that lead to that. On one hand, the firm is investing alongside the fund and is putting capital to use. That is typically 1 to 5%. But also the majority of the incentives that the staff is getting is really long dated, cliff vesting, and in line with the long-term nature of the asset class. We're here to generate a healthy outperformance to the public markets. We're achieving roughly 10 to 12% net for the investor base. If you compare that to the public markets, private equity typically generates about 4 or 5% of outperformance. We have been able to generate between 7 and 8, so a healthy outperformance compared to public markets. We're investing in private companies. Those are companies which are still growing quite nicely. We help them to expand around the globe. So about 60% of the investments that we do are directly investing into such a company, managing it, sitting on the board, and with a hands-on style, adding value. We also buy secondary positions from people which wish to sell, and we ultimately diversify further by investing into other funds. So it's a combination that really works well. We call it relative value, always doing what, relatively speaking, generates us the best outperformance. We have this team of roughly 1,000 around the globe, which is actively sourcing us investment ideas. We look at roughly 4,000 or 5,000 direct investment opportunities every year. We have about 80 billion of secondary flow, and we analyze more than 500-600 funds. We're highly selective, highly disciplined in this investment approach. So roughly 2% essentially ultimately succeed. So the team needs to have a high tolerance of frustration, and we obviously want to maintain this very disciplined, this rigorous approach to select what we believe, relatively speaking, is the best value. As mentioned, we have direct investments. There we actively seek investment ideas. We approach management, we approach potential vendors, and then ultimately structure a transaction around that. On the secondary side, it's a very proactive sourcing from banks, from insurance companies, from family offices, and again, trying to entice them to do a transaction. And lastly, for the funds, it's having a very, very good pipeline, a good overview over the market through our databases, through our in-house tools that allows us to be active and generate the investment ideas. We have these 19 offices which are spread across the globe. We have 1,000 employees, each of which is generating investment ideas. At the Global Investment Committee, we really select what, relatively speaking, we feel is the best. So there is a strong competition for these few transactions that we do, and that is also helping the people to be competitive. And for the program, it helps us to generate the best relative value and the outperformance. It's really a combination of 3 exit routes. On one hand, you have to go in public. That is actually not a big percentage. Between 5 and 10%, I would say, is ending up at the stock exchange, going public. There, I guess the disadvantage is you have to wait for some time until you can really totally cash in. The majority really is a trade sale, selling to a strategic or selling to another private equity firm is also commonly used route. Yeah, there is a Switzerland-based company called VAT. They're specialists in vacuum valves, which are used for clean room production, for flat panel TVs, for semiconductor appliances. We have been investing in that company for about 2 years before it went public. We have issued the stock in April of the previous year, and that essentially issued at 40 Swiss francs a share. We're now standing at roughly 120 plus, so it's been a very, very nice ride up. We continue to be invested, we continue to be sitting on the board, and we are still a very relevant shareholder because we believe there's still additional added value we can generate. It's a very laborious process that we need to undertake to really generate this transparency and valuations on a regular basis. In some products it's daily, in others it's monthly, sometimes it's quarterly. We really want to make sure that all the most recent information is well embedded and that we can comply with the IFRS statements. So there's a whole army of people in-house which is doing that valuation work using several methodologies, from DCF to multiple analysis to PE, bottom-up work, to really come up with those valuations on a regular basis. The process as well as the outcome is then being tested by PricewaterhouseCoopers that really make sure that we are compliant with the IFRS standards. I mean, like in any investment, there is a company-specific risk. A company might not exactly develop the way you anticipated. The beauty of the program is that it's a very, very broadly diversified fund, which gives you directly or indirectly access to roughly 2,000 companies. So the risk of a major fallout is actually quite minor. We have also seen in the Lehman's crisis that when the public markets went down by 30 to 50%, our sort of trough was roughly 15. So it's a much slower way down. To some extent, maybe also a little bit slower way up. A more consistent, a more steady performance profile that you see over the years, and actually with a healthy outperformance to the public markets as mentioned.